Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live at sktrading.live or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hey everyone, I'm Stephen Kalayjian and welcome to the Bull, the Bear, and the Ugly. Wow, what a day. All I can say is I am absolutely exhausted. Last night, the index futures opened and we pushed down to 48.32. And immediately my phone blew up and people's like, Steve, what do you think? Steve, what do you think? I said, well, I only can pray that they're there on Monday morning because guess what? I would back up the truck and buy everything because the breakout level from the prior high was 48.14, which traveled all the way up to 61.66. So I said, there's too much support there. And guess what? When I walked in this morning, the S&Ps were trading higher. And then I'm going to show you pattern after pattern after pattern. It was just absolutely Christmas in April. I'm telling you, these patterns were, and the divergences were just unbelievable. Combined with the buy divergences with the significant oversold conditions. And I'll show you the price to the distance to the 10-bar moving average. I'm telling you, it was just unbelievable. People hit their goals in probably the first 10 minutes of the day. Okay. And then we got this really big pullback, all right, around 10 o'clock. And then the S&Ps were trading 48.67. I had net longs across the board, and I'll show you the patterns on the 30 and 60-minute time frames on the index futures and in Avago. Avago, I told funds, the three best names I had today was NVIDIA, Avago, obviously the index is in the ETFs, but in Avago, NVIDIA, Palantir, and Amazon. I mean, you can just throw in a dart. That's how oversold they were. Okay, the S&Ps were that oversold, probably one of the most oversold conditions, well, obviously this year, but probably from last year, okay? And we shut up because there was some news about, they deemed it fake news. The White House didn't, verify it. S&P futures, I wrote it down, we're trading 48.67 and shot up to 52.86, 400, okay? And almost 419 points. I swear, it had to be 21 minutes like that. NASDAQ futures were trading 16,573.50, rallied to 18,360. You want to talk about volatility? You know, I walked in here today. I mean, I am so blessed. You know, I have the world of experience in doing this for over 41 years, right? And so I'm talking to people, hedge funds, family offices, my community here. I don't even blink. You know, that's the gift that I have. And now I want to share that with each and every one of you. When you have experience of this magnitude, it carries its weight. You know, I don't have any opinion coming in. There was no 830 number coming in, right? I just focused on the markets. I saw this morning the big buy divergences. I told you my mindset when I walk in each and every day. What are any 8:30 numbers or 10 o'clock numbers? No. Any earnings reports that are going to come out that are going to affect the market up and or down prior to the opening? No. What do I look at then? The bigger time frames. So I looked at all my bigger time frames, the 30 and 60-minute time frames. I looked at the daily and the weekly. I saw how deeply oversold the weekly was at a 9 oversold on my indicator. I saw the dailies deeply oversold in single digits as well, below 10. And then I looked at the S&P futures on the 30 and 60-minute time frame. I'm like, if they crush them, there's a huge buy divergence here. So when they pushed up and then dropped to 48.67, I'm telling you, I've never seen anything like it. We were in the range, everything was coming into the range, and everything just exploded. I mean, I've been around a long time. Even I have never seen an 1,800-point rally. I don't remember, 1,800-point rally in the NASDAQ in less than 25 minutes. S&P futures, 400-point rally. Okay, it was just absolutely what a Picasso. Now, granted, some news came out and that fueled it, but even though it was still a buy. Now, once those 30 and 60-minute time frames reversed to buy, I then got buy reversals on the spiders at 130, the Qs, the diamonds, and the Russell. So the odds were right there that the lows were in for the day. And then at around 1:32 o'clock, the 30-minute time frames reversed to buy. Pullback on the 3-minute, phenomenal. 2 pullbacks on the 5, but then the pullback at 3:30 between 3 o'clock and 3:30. Every oversold, every push down, I said I would be looking to buy them because the first pullback on the 15-minute time frames, and good Lord, did they rally. First time they rallied about 25. The second time they rallied about 35, 40. And then the last one at 340, they ran, oh my Lord, they ran about 70. Okay, these patterns, even in extreme volatile times, repeat themselves. And this is what I'm here to teach you. I don't care if it's index futures, stocks, ETF, commodity futures, forex, Bitcoin. It doesn't make a difference. Now, the funny thing is Bitcoin, with the S&Ps being up on the day and the NASDAQ being up 1%, the S&Ps being up 0.5%, Bitcoin was still down about 0.75 of a point, more than 0.75 of a point, down 5,700 points, below 78,500. So Bitcoin did not participate in this rally. Now, what we got here was a deep oversold condition. That's it. Okay? And I see that we're going to probably push up, probably maybe to the 53, 54, 54, 50, 5,500 area, if we get even that high, which is nothing. They move 300-400 handles like nothing. They're moving 20, 30, 40 handles on the S&P like nothing. Stocks are moving 1 to 3. Avago is now trading right now. Avago is trading $6 higher in the post market. Nvidia is trading up $1.80 higher. Meta is $6 higher. All right. Palantir is up $1.30 higher after hours. All right. So the volatility is here. And you know what's really great is how the community here really is understanding the terminology, the indicators, my numbers to the right, the strategies as I'm calling it out, and the understanding when the patterns all line up. When the 15-minute time frame reversed to buy, and then the 30-minute, we took the first pullback on the 3, the second pullback on the 5, the third pullback on the 5, and then all the patterns that we're making, pushing down on the 5-minute time frames against the 30-minute time for the 15, and boom, and a boom, and a boom. S&P's literally rallied 70 points in 10 minutes. Actually, about 20 minutes, 10 minutes after market hours, 15 minutes after market hours, and 10 minutes from the 350 time period. The patterns were absolutely amazing today. And let me show them to you. First of all, this is the pattern I want to show you on the 30 and the 60-minute time frame on the S&Ps. This is the first one right here. So here we are, ding, 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 ding. We come in, and here it is. S&P futures, they open at 50.12. They trade down to 49.37. Okay. Then you can see the next bar over here. It opens at 49.42. And look at that low, 48.67. Oh, 48.67. Okay. And then I said to myself, you got to be kidding me, right? You got to be kidding me. If I draw my horror, first of all, the MACDs are positive. The algorithms are positive here. So you have a disconnect between the continuous contract and the underlying ETF. MACDs are positive here. Low buying pressure, low selling pressure. The ADXs are off. Okay. But here, watch this. Look at this. You're making new lows here, and the 30 and 60-minute MACDs did not confirm. It's Christmas in April. Are you kidding me or what? This is A1 grade professional to be able to see this pattern. If I didn't have this software, I would never have been able to see this. Understanding the trend on my indicator 4, okay? Using it in what I use combination methodology. This is an absolute Picasso. Look at Avago, AVGO. I told this to a big fund today. The 30-minute time frame in Avago, 138.10. Okay, 138.10. The MACD did not confirm. Avago's trading 160 now in the 158. Well, just backed off 158. Avago's up 20 off the low. Look at Nvidia on the 30. MACD did not confirm the low. Look at this. This is one Picasso after another. Okay, Palantir, PLTR did not make a new low on the MACD, even though the MACD is negative. Amazon. See, Amazon. Look at Amazon. 161.38. Okay, MACD did not confirm the low. This is an absolute Picasso. This is a buy divergence in a negative trend, whereas the S&Ps were a buy divergence in a positive trend. These are Meta. Just throw a dart. Look at Meta. Look at this. 481.90. Meta's up almost 40 points from there. The Qs making new lows here. MACD's did not confirm on the 30-minute. More importantly, look at the Qs on the 15. This is what I said to people when I came in this morning. When we gap down and I shrink the chart, you tell me on the Qs on the lows, the MACD did not confirm the low on the 15. So the spiders, the Qs, not only had the buy divergence on the 30-minute, look at the 60, look at the 15. The MACD did not confirm the low. Right here, up and away. Kaboom. These are monster long patterns. These are monster patterns. And you get these patterns every single day as these patterns repeat, because I told you I spent nearly 10 years of my life building this. And I told you, okay, that all my strategies are based upon what? Buy and sell divergences. All right. If you can master the art of divergences, you can master the art of trading. I don't care if you're trading forex. I don't care what you do. It doesn't make a difference. These patterns repeat. All right. So that was the first thing. Plus you had the buy divergences here, and then you had this significant oversold condition. All right. Look here. The standard deviation is 5. When we were pushing down to new lows, 480.80 on the spiders right here, you can see where we closed. 507.32 minus 481.80. Add 25 to this number, 74. We were 74 points, 740 points on the S&P, $74 on the spiders from that low this morning. The standard deviation is 5, and we were 74. So I just knew it was just ready, primed to go up. I posted on Twitter, I'd be looking to buy 4,800 to 4,860. All right. I think the low was 4,867. Okay. But the technical pattern here was not only on the 30 and 60-minute time frame, but also the severe oversold condition. And because I'm a nut, okay, and I know every number in my head, the breakout level on the S&Ps was at 48.14, 48.18, whatever, from years and years ago. And once you took that high out and there was no overhead resistance, we went right up to 61.66. Now, let me tell you a little thing about measured move, and I have more to show you here, okay? So, and what's a measured move? So we dropped from 61.66, which was the print high on the S&P. We got down to 48.32. So let's do the calculator here. 61.66 minus 48.32 is 1,334 points. I'm not saying today, I'm not saying tomorrow, But the measured move, you add 1334 to 6166, brings you to 7,500 on the S&Ps, probably within the next 15 to 18 months. Okay, that's what's called a measured move. This is based upon years of me studying the markets and taking measured moves. I'm not saying it's going to happen tomorrow. My first target was 6,500, but there is an outside chance that this measured move happens within the next 18 months. Okay, all they have to do is get rid of all these tariffs, cut the taxes like they want, reduce the deficit, cut interest rates. We're going right back up. All right, now, I'm not saying it's all going to happen tomorrow, but this is the mindset. Now, let me show you another great pattern here. Okay, I'll bring up the spiders here on the 15. Bada bing, bada boop, right here. Here's a 30-minute. Once the 15-minute time frames reverse the buy right here at 145. Okay, I said the lows are in for the day. The lows are in for the day. All right, based upon the math. The lows are in for the day. All right. So once 2 o'clock came around, ding, 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 ding here, 2 o'clock, the 30-minute reversed to buy. MACDs are positive, ADXs are off, MACDs positive, right? 30-minute time frame correlated with the 15. Unbelievable longs. Unbelievable longs. I'm going to move the 15 here, bada bink. Here's the 33-minute. This is the first pullback on the 3-minute right here. This is the first pullback on the 3. Was right here. S&Ps were trading 04. Boom. 30 handles. Pull back again now on the 5-minute. So it goes in sequence 3, 5, and then 50. This is the 3-minute right here. And then here's the 5-minute first pullback. Here's another long on the 5. All right. Then look at this pattern. Look at this pattern. Between here and here, I must have called 3 or 4 longs on the S&P. The spiders, Avago, throw a dart, Meta, okay, Palantir, everything that I saw here, everything that is in our room here, pretty much, okay? NVIDIA. Look at this oversold condition on the 15-minute time frame into the positive MACD. 1, boom, 2, boom, 3 great longs, okay? 3 great longs. Now, what is it that I'm showing you here? Oversold into a positive MACD. So this is the first pullback on the 15-minute time frame after the 30-minute correlated. Oversold. So this is a buy divergence and a buy disconnect. Okay? A buy disconnect. 15 is bullish, 30 is bullish, 15 oversold, positive MACD, right? But the 60-minute time frame is still negative. So this is a buy divergence and a buy disconnect. If you can understand the conditions, which are very simple, 15, 30, and hourly time frames, they're all based upon my indicator 4. You can have a trend, a buy reversal, a sell reversal, a trend, a buy reversal, sell reversal, or correlation, and a disconnect. Of the 5 conditions, each condition has 2 strategies, a buy and a sell divergence. There it is, a buy divergence and a buy disconnect. 2 of the 3 time frames were in buy mode. Unbelievable. Unbelievable. I don't think we go straight up from here. I think there's going to be a lot of back and filling, and, there's, who knows, Israel came out and said they're going to do lower tariffs down to 0, I believe, and 50 other countries. But it's not the 50 countries. It's China. It's China, it's China, and it's China. And at one point today, President Trump announced that potentially he may raise the tariffs to 50% from 34%. So if that happens, obviously they're going to get kabooshed, okay? I don't think he's going to do it, but you never know, to make a point. But if he does, and they do push down to that 4,800, even if they go through that 4,800, then I think the odds are that we're going to get a snapback, because I think it's going to be short-lived anyway. Okay. Now, I'm not saying we're going to 6,100 tomorrow, but I think there's so much volatility. I can't even tell you. My phone blew up on how well I'm so proud of my community. Even if you're new, you'll get this. Okay. How proud I am of my community for being able to achieve their goals and then some today. I'm really beyond. I mean, the volatility here, my guys did well. Amazon, Avago, Palantir, NVDL, prior to the, right after the opening, Avago even pushed down further. I said I'd be buying more. I know this pattern. I see that pattern on the 30 and 60. Boom, 43, 44, 44, 46, 47. Okay, Avago, up 8, 9 like that. Avago rallied 20 points off the low. I came in and I said to people, Avago is my number one stock based upon the buy divergences off the 30 and the 30-minute time frames. And of course, the index futures, the TQQQs, the SPXLs, the spiders, the Qs, right? Now, the Dow still closed down on the day, as did the Russell. S&Ps, NASDAQ, up on the day. We're not out of the woods. We're not out of the woods, all right? Now, I want to show you some other names here. Look at SMCI. I'll switch this to 30. I'll switch this to the 60. All right? SMCI. Watch this. It's pure math. 30-minute time frame reverses to buy. Look at the push down. Makes new lows. Non-confirmation. 28.5. 27.64. Excuse me. Up almost 4.5. Right after the push up. After the opening, the 30 reverses the buy, correlates with the 15. 60-minute time frame reverses the buy at 10:30. You look to buy every pullback. Look at the 15-minute time frame. Beautiful pattern right here. Here's a pullback on the 15, 31.74, pushes up $1. Here's another pullback here. Trust me, it got deeply oversold there, and then it runs again. 31.80 probably. Look, almost up $2. And at the end of the day, here's another one. Okay. So when you see the algorithm reversing to buy on the 30 and the 60, the 30 correlates with the 15 and the 60, you could have bought a lot of pullbacks on the 5-minute time frame, on the deep oversold conditions, and then the 15s. Again, not once did it say to be short SMCI. All right. Also, today is a day, and I tell you every day, hand on the mouse. Hand on the mouse. So important, because as they're moving, you got to keep moving with them. This is like hitting 120 mile an hour fastball today. Again, the most volatile day we've had based upon points in history. If I come here tonight later and I add up all the moves here, it's probably north of over 2,000 points on the S&P. NASDAQ probably 4,000 to 5,000 to 6,000 points. Up, down, up, down, up, down. S&Ps at 220, we're trading 51.48, 51.53. You blinked, they dropped 60. Okay, then rally 30, and then drop 40, and then rally 30, and then drop 30. It's just amazing, the moves here. All right, again, but we're here, right? We're confident. We have technology. You have me. You have technology. And I'm here to teach you and guide you along the way. All right. When I get back, I will tell you what I'm expecting for tomorrow. And can't wait to share it with you. Okay, so for tomorrow, there's no 8:30 number, but we do have big numbers coming out Thursday and Friday. We have the Thursday CPI number and the Friday PPI number. So get ready for some volatility there. Net, right now, coming into tomorrow, the 15 and 30-minute time frames on the spiders and the Qs are still in buy mode. The diamonds and the Russell are not in buy mode on the 30 and 60-minute time frames. If we do get any type of pull, it looks like right now we're probably going to trade higher tomorrow because the 30-minute time frames look like they're going to want to turn up here, and I'll show that to you in a minute. But the big number here on the Qs is the 429.27, 429.27. And the spiders is 508.18, and we close at 507. So that's 10 handles higher from here. That's like trading 51.35, right? If we get buy reversals on the 60-minute time frames, on the spiders, on the Qs, we'll then look to buy some pullbacks here on the 5, and then the bigger ones, the 15 and the 30s. With the 30s looking like the way they're going to push up here, it's fair to say that we probably might gap up tomorrow. Okay. However, if we gap down tomorrow, okay, the MACDs are positive now on the 60, the 30, and the 15-minute time frame on the underlying ETFs. So I don't think today's low, 48.32 on the overnight and 48.67 or 16,000, what did I say, 573.50 on the Qs, on the NASDAQ futures are going to be touched. I think we're going to start drifting higher here gradually to try to work off this oversold condition. And then I think, again, we're still negative on the weekly, but let me show you something here that really hit me, okay? So if you look here on the SDSs, and I'll shift this to the weekly time frame right here. The weekly reversed to buy today for the first time in God knows how long. Okay, look at this, going back on the weekly. Okay, now it's very rare that the weekly reverses to buy, positive MACD, rising ADX, big buying pressure. So we're not out of the woods here by any stretch. Okay, then if you look here on the spiders on the weekly, you can see here that we got this on March 14th to sell, and then the bear flag had 58.30. High was 58.37 on the S&P, and we dropped. Now we're still 63 points away. What I'm expecting is some type of an oversold condition to push up and work this oversold condition up off the weekly. I'm not saying you're going to get overbought, but on the daily as well. Okay, probably like to get a push up here, maybe 5,300, maybe 5,250, which, well, actually it was 5,286 today, 5,250. 5350, 5450, another couple hundred points higher. Okay, even if we rally 200 points higher on the S&P, this would cut this down to 29. Still, the standard deviation's 5, but it doesn't have to get filled right away. Okay, this number doesn't have to be erased right away. Okay, now the other thing that's really disturbing here. Okay, well, the one good thing is also that the weekly MACDs, okay, are starting to go below the pivot. So we're probably about 3 to 4 weeks away before the weekly is completely below the pivot line, which is a solid white line. But here's the big problem. Look at the monthly, 535.96. We're 9, that's 290 points on the S&P. That's $29 away on the spiders. We have the month of April to see if we can get a rally. And this number, 535.96, does not closes higher on the close of April 30th than this number. If we close above, let's say 536, well, this number will still be intact for the uptrend. If we close below this number on April 30th, then the first time since right here, 531.23. And then I can honestly say we'll be in a negative trend. Okay, now it's okay. The MACDs are negative here. Even if we got a push up, you have all this ton of overhead resistance here. It's going to take an unbelievable war chest of capital. So I'm thinking a push up, a push down, get these monthlies. Okay, let this go negative. Get these monthlies, 7-8 months to go below the pivot, and then I think we explode to the upside. Okay, that's what I'm expecting. But for tomorrow, right now, the 30 and the 60-minute time frames are bullish. I do think we're going to get another push up. If those 60-minute time frames reverse to buy, then I would be looking to buy pullbacks on the spiders and the Qs. All right. Again, we're deeply oversold. The market ignored any news today about the tariffs or anything, but we're just deeply oversold. So I've been around and short covering rallies and bear market rallies and whatever you want to think we're in right now are vicious. And I knew we were it's deeply oversold. Probably, like I said earlier, one of the most deeply oversold conditions, not just this year, but even from last year. All right. When I come back, I want to share some great stories with you. Over the weekend, I got to meet so many people with my new company, SKTrading.live. And I hear and I talk to people from Germany, from all over the world, and here in the United States. And, it gives me great joy, and people just really want to be taught well and guided well. And, I take the time, and this is what I strive to do here with my new company and my great team behind me and everything. And, so many people in our community help each other out. And I don't ask anybody to do anything. I just say, listen, we're all a family here. It's important that we all try to assist, whether it's a technical issue or an understanding of some terminology or anything that could help them in any way, shape, or form, give them the reason to, enhance their trading, to give them the ability to want to continue in going in the right direction. Whether it's me as an educator, a mentor, teaching and guiding, or the people in my community. So I'm very, very happy the way things are going. And I'm so grateful for everyone who's entrusted me to teach and guide you along the way. It's so important to take my playbook, understanding the 5 conditions, the 10 strategies, understanding my playbook, learning my indicators 1, 2, 3, 4, the numbers to the right, my terminology, trading strategies, and then understanding the scaling in and scaling out process. Okay. And it's also important to understand that when you hit your goals, you stop, make sure you have your stops in place. No one's bigger than the market. But, this has given me such great joy at this stage of my life. At 62 years old, I love it. Today, I had nothing to eat. I love it. I stayed here all day. I literally just went to the bathroom once, and I just literally it was just nonstop. And in my 41 plus years, I can tell you I've seen a lot, but today the volatility was off the charts. As my friend said, it made history. It's the most volatile day based upon points in any given day, NASDAQ and S&P futures. But overall, it was a great day, and I just love being here for each and every one of you. All right. So it's really important to be proactive, especially in my Discord as a member, to ask questions. And I just want to say thank you for joining me, and thank you for letting me into your trading world and let me empower you into being great traders. Again, those of you who are not part of my community, please go to sktrading.live. And it's a 9 to 4 every single day live stream, index futures, commodity futures, stocks, ETFs, and Bitcoin. I'll be doing a Bitcoin channel soon, but nonstop action all day long. And please hit the subscribe button. Please leave comments. Also, if you can, please follow me at official Stephen Kalayjian on X, Instagram, and TikTok. And also, before I go, this weekend I had a lot of people scamming me. So please don't. I don't DM, so I don't rely on DMs. I give out my phone number, 914-500-7484. If you want to text me, I try to get back to you as possible. Again, thank you for being here on The Bull, the Bear, and the Ugly. I'm exhausted. You can hear it in my voice. I just got over being sick, but it was a nonstop day. And thank you very much. God bless you, and God bless the United States of America.
Thanks for tuning in to The Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.